Let's start by talking about something that may be directly impacting your money and investments. If you follow the economic news, you've probably noticed that the financial markets have been experiencing extreme volatility lately. But what many people don't know is that there are signs that much of this may be the result of strategic decisions made by figures like Donald Trump. He appears to be using the stock market as a political tool, and this is causing a real earthquake in the global and personal economies. Today we're going to dive into this issue and understand exactly how these decisions are affecting your investment portfolio. To begin, we need to understand the role that Trump plays in the global economy. During his presidency, he adopted aggressive economic policies such as trade tariffs and international sanctions, which reverberated across all markets. These measures seem to be designed to protect specific US interests, but the collateral impact was enormous. Companies that depend on global supply chains began to feel the negative effects, and this quickly reflected in their stock prices. What was once a long-term strategy now appears to have become a weapon targeted against political and economic adversaries. But here's the big question: is this deliberate destruction of the stock market really intentional? There's strong evidence that it is. By creating economic instability in strategic sectors, Trump may be trying to pressure governments and companies to accept his demands. For example, by imposing heavy tariffs on Chinese products, he not only damaged trade relations with China, but also shook investor confidence in global assets. This created a domino effect, with even small investors being hit. And how does all this affect you? Imagine that you invested your money in stocks of companies that depend on imports or exports. With the increase in tariffs and the escalation of trade tensions, these companies began to lose market value. The result? Your investment portfolio may be shrinking without you having done anything wrong. And worse, this may continue to happen as long as the political and economic disputes persist. The sectors most impacted so far include technology, energy, and commodities. Technology companies, for example, which depend on components manufactured in China, have seen their costs skyrocket. In the energy sector, sanctions imposed on oil-producing countries have created instability in global prices. All of this has contributed to a scenario in which investors are unsure about where to put their money. Is it worth continuing to invest in stocks, or is it better to look for safer alternatives? Experts are divided. Some believe that this crisis could be an opportunity for those who know how to take advantage of it. After all, when stock prices fall, it is possible to buy valuable assets for less money. However, others warn that the current instability could last much longer than expected, especially if Trump's decisions continue to prioritize political objectives over economic stability. So, what can you do to protect your investments? First, diversify your portfolio. Invest in assets that tend to be more resilient during crises, such as gold or government bonds. Second, pay attention to the news and market movements. Understanding the political and economic context can help you make more informed decisions. Third, avoid impulsive decisions based on fear. Often, the biggest mistake an investor can make is to sell their stocks at the worst possible time, when prices are low. Now, I want to tell you something important. There are hidden opportunities within this crisis. While many investors are panicking, others are finding ways to profit from the situation. For example, companies that have managed to adapt quickly to changes in the economic scenario are doing well. Investing in innovative companies with flexible business models can be a good strategy for the future. But how do you know where to invest? Here are some practical tips. First, do a detailed analysis of the companies you are considering. See if they have solid plans to deal with crises, and if they have robust financial reserves. Second, consider investing in sectors that tend to grow regardless of economic conditions, such as healthcare and technology. Third, seek guidance from qualified professionals. A financial advisor can help you navigate this complex scenario. It is also important to understand that this situation may last longer than we imagine. Trump's decisions are not isolated. They are part of a larger strategy that may continue to influence the market for years. Therefore, prepare for the long term. Review your financial planning and adjust your expectations. Remember that investing always involves risks, but knowledge is your main weapon to minimize them. Finally, I want to leave a clear message. Even in times of uncertainty, there are always ways to prosper. The secret is to stay calm. Study the market and make strategic decisions. Don't let fear or panic guide your choices. Instead, use this crisis as an opportunity to learn more about investments and strengthen your financial position. If you follow these guidelines, you will be much more prepared to face the challenges that lie ahead. If you liked this video, don't forget to subscribe to the channel and turn on notifications. We will continue to bring you analyses and tips on the financial market to help you make the best decisions. Leave your thoughts on this situation and how it is impacting your investments in the comments. See you next time.